Hello and welcome. So in today's session we're going to look at cryptocurrencies and in particular finding value in cryptocurrencies. Now remember, these are just my opinions and not investment advice. So if you are looking at investing in this space, you do need to do your own due diligence. You do need to do your own research. That being said, this is all based on just over a year's worth of research that I've taken. If you disagree with it, if you want to have discussion about it, it'd be great to hear your opinions below. So, finding value in cryptocurrencies. Why is this important currently? Now, the reason I think this is important currently is because we are going through these major world changes. So look at what's happening with coronavirus, look at what's happening with all the big shutdowns, and in particular the markets. Just before the shutdown, all of the markets like S&P were at their all-time highs, like 50-year highs or whatever. They're actually all-time highs, not even 50 years, just never been seen before. And it got everyone thinking, look, this has got to be a bubble, this is going to crash. How do we save our money? How do we protect our wealth? And in the current monetary system, I feel that this is very, very difficult to do, and there's multiple reasons for that. One of them is the massive excessive of printing money. And the second reason is the culture of thinking that if you save money, you're actually being detrimental to the economy. So people that save money are kind of seen as kind of like, no, this is all wrong. You need to spend. You need to keep the economy going. Now that's all well and good, but during your best times, when you're young and you're healthy and you're fit, if you're spending all of your money, you're not thinking about the future. You're not thinking, in actual fact, I'm going to need a lot of money to exist when I get to pension age, when I get to, retirement. And it's unlikely that the pensions of the world are going to cover you in that age. So, do you really want to be relying on governments? Do you really want to be relying on pensions? So the idea being is that you really want to save your wealth now so that you're not a burden to anyone and you can be self-sufficient. Those times are meant to be your golden years, but if you don't save the money whilst you're fit and healthy, there won't be golden years. And this is where I think society's got it slightly backwards. And this is where I feel that cryptocurrencies may be able to play a role. That being said, not all cryptocurrencies are created equal. There are so many out there that are just absolute scams, and they're completely, terrible, and all they're looking at is getting getting consumer investors to just pile their money in, and basically they lose all their value. And you've got to be very careful of this, especially if you are like me, where you're limited income. You can only afford to put like 30 to £100 a month down. And every cent that you put down, you really want to make sure that it goes to the right area. So I've developed a few things, and I'll keep developing these tools, and we'll keep talking about these in the future. But I've developed a few things over the coming years to kind of protect myself against scams, protect myself against major decreases in value. So we're going to delve into that. We're going to have a look at that, and we're going to have a look at finding value. Now, once again, if you have any questions, if you disagree with any of this, it'd be great to hear your views below, and we'll go from there. So let's head on over to the presentation and see what we have. So finding value, hold on, just want to make sure everything's working properly. Yeah. So finding value in an open market. So this is all about cryptocurrencies and making and trying to invest in the correct project. So there are currently lots and lots and lots of projects. So I've developed a few points that I follow before I put my money in. So here's the questions that we're going to look at today. So firstly, what is my ethos for investing in cryptocurrencies? Remember, this is not investment advice. You do need to do your own due diligence before you invest your hard-earned money. These are just my thoughts and opinions. Why don't I invest in tokens? Why are banks and governments not investing in crypto? What properties do I look for when I determine long-term value in a project? And what projects am I currently interested in? So here's my ethos in the crypto space. So a new monetary system should only exist if it improves on what came before. A new system should aim to be open and fair for everyone who participates. So the first thing that I look at is coin supply. Now, in the current fiat systems, be it the pound, be it the dollar, be it the euro, these are not fixed coin supplies. Every time the government needs to do something, they can get more debt, they can print more money, they use these mechanisms to kind of make sure the economy stays at one level, which is great for the overall society. It's not great for the individual, because every time money is printed, any pounds that you hold in saving or any euros that you hold in savings actually decreases. So in my opinion, there should be a maximum and fixed supply of coins. Now, this is the opinion of Bitcoin, the original, the founding father of cryptocurrencies. It's important to say that I actually don't own any Bitcoins, and I'll try and explain why that is. But I do agree with this philosophy that there should be a maximum and fixed supply. Now, that can be debatable. It really depends on how much adoption a coin gets. Currently, I only look at coins with a maximum and fixed supply of 21 million. That may change in the future, but that was what Bitcoin wanted to do. That's what Satoshi wanted to do, and that's the philosophy that I kind of look at. And because this space is so young, I really feel that at this current time, there is no need for a coin to have any more coins than 21 million. Now, when you delve into the cryptocurrency space, you could say, well, that's not enough for everyone in the world. But what you've got to remember, it doesn't really work. Cryptocurrencies don't really work like fiat money. They don't get divided into hundreds. They get actually divided into 100 million. So one coin actually equals 100 million Satoshis. So when you look at it like that, it's actually a really big supply just from 21 million. And that's why I think that is important. The next thing, an open ledger. So in the current monetary system run by the banks, this doesn't happen. If you want to find out what's happening in the ledger across every single transaction, I'm pretty sure you can't do that unless you are kind of one of the key figures in the actual institution. Whereas with Bitcoin and most open blockchains, there is an open ledger which keeps everyone honest. Now, my philosophy for this is, if it has no block explorer, do not invest. And this is easy to find. If you go to the platform's website, normally it says block explorer, and you can go straight in and you can look at the transactions, you can look at everything that's happening on, and there is so much details in cryptocurrencies that it will blow your mind. And when you compare this against the legacy banking system, you'll kind of start seeing what everyone else is seeing. Wow, this blockchain thing is amazing. But be aware of this one as well. Not every blockchain has an open ledger. So if you can't find that block explorer, don't invest. It's as simple as that. You want to make sure that platform is alive, and the block explorer is your connection to the cryptocurrency to see if it's alive. Now, within that, you can see how many wallets are available, you can see how many transactions are happening, you can see how the fees work. There's so much detail there. So the top 2 points are probably my biggest points, and by following those 2 rules, you can get rid of thousands from your list of research. Okay, so just following those 2 rules, you remove pretty much a massive amount of coins from your research. Saves you a lot of time. Next bit, coin distribution should be fair and wide distribution. There should be a fair and wide distribution. Now, not all coins are distributed evenly. So, for instance, what the dubious kind of activity that happens here is there is an unfair pre-mine. Now, not all pre-mines are unfair, but if they only go to 1 or 2 people, or the core people, and they are like, I don't know, 20% of all coins ever done, then you've got this massive centralized entity, and all you're doing is replacing one bad actor for another. So the normal banking environment to this one, where only the few get rich, and it's not really what this is about. This is about wealth for everyone. So making sure the initial coin distribution is fair and widespread. So making sure that if there is a pre-mine, it goes to lots of people, including the developers, and to make sure that Another thing that happens in this space is secret mining. So a coin will go live, and for maybe 2 or 3 weeks it will be done in secret. That doesn't seem like a lot, but in actual fact, in the early days of cryptocurrencies, you can actually mine about 1 million coins in the first 2 weeks, So that's something you want to be aware of also. It doesn't seem like it's unfair, but it really is. If you can mine up to 250,000 coins in 2 weeks before anyone knows about it, that's a really large amount of coins. So be aware of that. The next thing that I look at is storage. Secure and free wallets with access to your private keys. Now, this is the one area that puts a lot of people off of cryptocurrencies, because you are solely responsible for your keys. So if you lose your keys, you lose all of your money. And that puts a lot of people off. There are a few rules that you need to follow. First, you need to write down your keys in a safe and secure place. And you need to make sure they're the correct keys. And secondly, you just need to make sure that your device that you put the keys onto or your money onto is also safe and secure, that it can't be hacked. Now, as time goes forward, these mechanisms, these wallets will become more sophisticated, where it makes attacks really hard to do. At the moment, multi-wallets tend to be really less secure than single coin wallets, so be aware of that as well. If you're getting one of these multi-wallets, sometimes they are just not as secure as single asset wallets. So I tend to look for cryptocurrencies that have their own mobile wallet and their own platform wallet as well. So you should also be able to store it on a hard wallet, or whatever they call it, like a Trezor or a Ledger. Now, so once you get past this area of storing your keys and you've got all your money, this actually becomes a massive factor, because in the current banking system, they can take your money and they can, lend it out to people and make money from that money. But all the time you hold it in your own custody, that can't be done. So if we hit a crisis like what we've currently got, that your money is with you, that the banks are not doing dubious things, they're not stopping you from getting to it. So, that's a massive factor as well. So the next thing, transactions. You should look for platforms that have low fees and have fast transaction times. Now, I consider in this current space at its current time that a 10-minute transaction time is actually okay. All the time you're looking at store of value, so looking at just saving your money, those transaction times are absolutely fine. As you go further into the future, anything longer than 30 seconds is probably going to be too slow. So making sure that you find a platform that, yes, can do it in under 10 minutes, but in future has the prospects to do it faster. And for low fees, that's going to be really, really important if you want to see this used in the future for you actually spending your money. The next one, so governance and community, responsible and decentralized. This is going to be a massive factor in 10, 15, 20 years time. This is going to be a massive factor. At the moment, it's not the biggest thing. It's not the biggest issue in crypto, but it will be. As money becomes more valuable, you get more dubious activity. And this is where you need a strong community and you need strong governance systems. Very few of the systems I've looked at have this. Bitcoin does not have strong governance. Bitcoin, you could say that it is controlled by the miners, it is controlled singly. A lot of people see that as a positive. Personally, I see that as just replacing one set of bankers for another set of bankers, and that's not really what you want. If they can change the rules at will, if they can do dubious things without the consent of the community, that's not good practice. That means you, as someone that holds those coins, has no say. So you want to look for you want to look for projects that allow you to have a say. That being said, that say should not be cheap either, because the fact is, if you are having a say, you need to be responsible. And a lot of these governance systems that I'm looking at currently make you stake your a large portion of your wealth to have those votes, to have your say on the platform, which is an interesting thing. I think that's going to be really important going forward. So the next thing then, does your platform have development? Are they building tools, services, and removing the middlemen and fees? This is going to be a big one forward. At the moment, I think personally that cryptocurrencies are only good for money. So the tools that I see them building should be around that factor, should be giving you good ways of transacting, should be giving you good ways of using the money. As this goes forward, I would expect to see proposals for web tools for merchants, or even just tools where shops can transact with them with the coin. That's going to be really important going forward. At the moment, as long as they're developing their core structures around money, that's great. And finally, rewards. To drive adoption and the health of the platform, you need to have long-term sustainability. Now, this is very uncommon in most of these platforms. A lot of platforms rely on the generosity of their community or venture capitalists to invest in the funds. This is not a great thing either, because those venture capitalists will be in and out whenever they want to, as will the community. So what you want to really see is that there is a central pot, or not necessarily central, but there is a pot that can be drawn from to pay developers, to pay for other activities that need to happen in this space. This is becoming more popular, and it's called a DAO, so DOA, a DAO, decentralized automated organization. They have other names as well, but that's something that you want to be looking at. So these are my ethoses. We have 8 points here. So coin supply, open ledger, coin distribution, storage, transactions, governance and community, development, and rewards. So this is kind of the ethos that I follow. So let's look a little bit deeper at this. So the next thing is, I don't look at tokens. So none of my holdings or none of the things I'm researching are tokens. So tokens have a place in the ecosystem, but not in my strategy. There are too many variables and there are too many uncertainties. Money is crypto's big application. So at this particular time, that's not to say in the future that tokens won't have their place. I just don't feel they have a place right now. Crypto was meant to solve the money problem, and it hasn't done that yet. So that's what we need to focus on. And all the time you're plowing your money into tokens, you're diverting from what the good cause is. There are arguments for this, and in the future these platforms will be fantastic, and they've already raised billions of pounds, and that's absolutely fine for them. But the fact is, what they're trying to do is kind of a little bit trivial compared to what money can do. So if you're trying to dethrone Airbnb or Uber, that's kind of, these are fairly new entities anyway, and all I see that is changing one set of hands to another set of hands. And what you got to remember is this kind of decentralized Uber or decentralized Airbnb, they're still taking their money from you, okay? And until they work out a system that there is no middlemen, it doesn't have my support. So no tokens, removes like 99% of all coins. It actually, by doing this one strategy, will reduce your research by hours and hours and hours. Combine that with the 21 million and you're really only looking at about 10 coins, less than that probably. So why are banks and governments not investing in crypto? So in the long run, it's in everyone's best interest to invest in the future of open monetary system or systems. But new things take time, and understanding adoption, and they take time to build. All the time there are vulnerabilities in the system. The adoption will be slow, and this system is really, really young, so just keep that in mind. There are still lots of vulnerabilities in the systems. So I talked about wallets being a vulnerable point, but also exchanges are a vulnerable point as well. So until these two factors get solved, banks will never invest, and governments will be slower to invest. I see banks and governments not investing in terms of capital, but I see them investing in terms of mining. So they will actually mine the coins, or they will create their own cryptocurrencies and get the money and get the system started that way. But that won't happen until these vulnerabilities are addressed. And for the open space, the two major ones at the moment are definitely the exchanges that we use and the way that we store our coins. So other things that they're not so fond of. So maximum coin supply. when a bank or a government is looking at supporting the whole ecosystem, having a maximum coin supply is not in their best interest. So this is something that will probably stop them from wanting to get involved in crypto. And there's a few debates about the gold standard of this one, and I see that as probably one of the biggest factors. Now, the open ledger, there is evidence that there are government members that would like to see this accountability for all. Banks, I don't see them wanting an open ledger. I think what banks do is typically very secretive, and I don't see them wanting that open ledger so that everyone can see exactly what they're up to. I think for them that would cause a few problems, but certainly governments, most governments are not opposed to this. There may be a few figures that are, but most governments probably would not be opposed to this. Rules of the games are fixed. So would governments and banks like individuals to be able to change the rules? Probably not. They want to have that control. That tends to be a key factor. So with the open monetary system, rules are kind of gamed by the people that own the currency, which, if you think about it, that's what fiat currency should be anyway. If you own the pound, that's effectively giving you a stake in the British economy. If you own the dollar, that is effectively giving you a stake in the American economy. And that's not really the case, is it? So when you own a fixed currency of 21 million and you own maybe 21 coins, you have 1/1,000,000th of the supply, which gives you a fairly decent staking position in the owners of that currency. No middlemen. So most people like middlemen because it allows them to have counterparty risk. It allows them to draw money from the system. Having no middlemen takes out a lot of the guff of the system, and that is one of the factors that cryptocurrencies are aiming to solve. So do banks and governments, will they agree with that? No, I'm pretty sure that they need that. They need to still take their stake from that. So the next question, how do I determine long-term value? Now, we've been through this again, so I'll just kind of say how I invest. So all of my research revolves around projects that aim to be sound money. So we're not looking at platforms that want to decentralize Uber or whatever. We're just looking at money. So my strategy is just looking at money. And they need to be building the infrastructure. So how I see this works, I see that if you want to be sound money, you have to build the core platform first. Now, the core platform isn't about exchanging value. So it's not about kind of buying your groceries. It's about storing that value, making sure it's safe, making sure it's secure, making sure the infrastructure will last 1,000 years or 100 years or whatever. If it's only going to last 10 years, that's not long enough to store value. So there's the first point: sound money, store value. So it has to be secure. The next thing then is a medium of exchange. So once they've solved all that, and that's not happened yet, most of these projects are really in that security stage. Like I say, all the time that there are issues with the wallets, all the time that there are issues with the exchanges, store value is not there. Solve those issues, then you can move on to the next bit, which is the medium of exchange. And then finally, where I see us being in about 10 years' time, is the unit of account. And I do think it will take 10 years to get that full cycle working, and there'll be development along the way. So as said before, what am I looking for? Maximum supply, definitely 100%. 21 million is up for negotiation depending on adoption, but at this current point, and probably in 10 years' time, I see no reason why any of these platforms would have any more than 21 million coins. There's so many out there that've got 21 billion coins or 100 billion coins, and it's like, well, remember, each coin gets divided up into 100 million. So that's a lot of supply for very few people using it. So at this particular juncture, 2020, 21 million, not looking at anything else. The next thing then, open ledger. Got to be open and transparent. Good governance, good development, privacy and security. I'm not too worried at this point about privacy, but that will be a massive factor going forward. So if your platform isn't looking at implementing security, it's probably something you want to not, it's a bit of a deep issue, this one, but it's all about fungibility. And the fact is if you don't have privacy and you have some really old coins in the system, what you're going to find is that some exchanges, some wallet providers, they'll say, no, that coin is not as valuable or cannot be used as these brand new minted coins. And that's something you do not want. Every coin should be treated equal. So that's where privacy really comes in. But for a lot of coins, that's probably still about 5 years away. So we're not too worried about that, but it's certainly something for the future. Coin storage, as we said, if they don't have a mobile wallet, that holds just that coin, if they don't have a platform that holds just that coin, leave it alone. It's not even worth it. And then finally, the tools that are being built out. So what projects am I looking at? Now, as I said before, because I'm not looking at tokens and because I'm not looking at coins with any more of a supply than 21 million, it really does cancel out a lot of coins. Now, I've been through CoinMarketCap and I've got to about, this was about a month ago now, and I looked through every single coin that wasn't a token that had a maximum supply of 21 million. And there were a few more than this, but there was only about less than 20 coins that were doing the right thing. So this was really interesting. So then what I started doing is all of my research. And so my bucket 1 fulfills all criteria. My bucket 2 fulfills most of the criteria, and my bucket 3 is kind of like fills some of the criteria but has the potential to fill all of the criteria. So at the moment, I don't hold any of bucket 3. Those are really the ones I'm just watching. I'm watching the development. I'm watching the ecosystem build up, and I'm just seeing if something might develop there. My bucket 2, I hold all of apart from Bitcoin. Now the Bitcoin one is a bit of a funny one because the price is so over, and I've got some matrix I could show you at a later date about how these prices work. It's really quite a high value, and people say, oh, this is going to $1 million, this is going to £100,000 or whatever, and that's absolutely fine. It can go to $1 million, it can go to £100,000, but what I'm really looking for is long-term investment. I don't want to have to be matching the market or pulling my money in and pulling it out, and every time there's a bull run, making sure I get out of the top and get in at the bottom. That's not what I'm doing. That to me is just something that is unsettling, and it's a process that I don't particularly like. And currently Bitcoin is around, as of today, is around £8,000. So most people think, yeah, that's great, I can own one Bitcoin for £8,000. But to put this in mind, if it increases to 16,000, you've made 8,000, which is great. But more likely, over the last 2 years, it's actually gone down to £2,500. So you could lose it all. The risk factor is actually really, really big with that. And with the project that is so young, 10 years is young for money. It's not something that I'm willing to kind of get into massively. Now, I've got my intrinsic value set at Bitcoin at around £4,000, but it could actually be lower than that. So at the moment, if I'm going to invest £4,000, it's not going to be to get one Bitcoin. Ultimately, I want to own a portion. I want to own, if it's a 21 million supply, I want to own 21 coins. That gives me a millionth of the supply, and if that lasts for another 10 years, that will go up just because of the nature. So Bitcoin is not on my radar, and I think it will be successful, but it's not there for me. It's too risky. It's something that I feel that I won't own enough of the supply at. I won't have any governance, and it doesn't fulfill a lot of the other criteria. Now, Decred, I've done lots and lots of research on Decred or DCR. Now, it's currently valued today at £12. So last week when I started buying, it was between £7 and £10, and it's been in this range for a while. And if you look at the intrinsic value of Decred, and once again at a later day or a later project I'll show you this, but the intrinsic value is around £18. So as it kind of moves forward, you've kind of got this long-term guarantee that you're on a steady path upwards rather than this chaotic path. So Decred as my long-term hold is an absolute must for me, and it's currently the only one that I invest in. It's the only one that I look at. Dash is another one. I do trading pairs against Dash, so I look at kind of cross trades with Dash, and sometimes it's quite nice to trade in maybe 5 Decred for Dash and then pull 7 back into Decred, and that's quite a nice little trade for me actually. That's worked quite well in the past. And then Bitcoin Cash is also an interesting one, and there's a lot of controversy around Bitcoin Cash and Bitcoin based on the hard forks, and it's something, if you are going to invest in cryptocurrency, you definitely need to look at and see which side of the argument you're on. Now, I follow Bitcoin Cash quite closely, and it's a fairly decent price. The thing that worries me a little bit about Bitcoin Cash is it is the kind of the negative publicity that it's got. So it's going to be about another 4 years before we see if Bitcoin Cash can actually survive. Now, if it survives, it's going to gain adoption. So its current value of £200 is actually really, really good. But if it doesn't survive, you're sat on a bag of nothing. Now, bucket 3, Horizon looks really good. It's cheap at the moment, but it's still quite young, and it stems off of, I think it's Zcash Classic or something like that, which, and the distribution looks fairly fair, but it doesn't have a mobile wallet, so that's kind of holding me back a little bit. You can get it on a multi-platform, but I'm not quite there yet. I'm still watching it. The price is good, but I'm just in the watching stage. And Monero and Zcash are your ultimate privacy coins. If you're looking for privacy, you probably don't need to look much further than those two. Now, that's it for my little presentation. Hopefully that wasn't too painful. Hopefully you kind of got a good bit of value in there. As we go forward, I will look at the different values. Now, it is important to say that I am very biased towards Decred at this point. All of the metrics that I've looked at do say that everything that I've just shown you there, it's in my spectrum that I'm looking for the long-term value. It's not very exciting. I've got to be honest with you. If you're looking at a currency and you're looking at investing in Decred, it's not exciting. You're not going to get the pump and dumps. You're not going to get all this halving hype. It's slow and steady. And I'm not interested in excitement. I'm just interested in sound money. I'm interested in long-term future. And now, so I'm in my 40s now. I've got another 30 years before it kind of has to come true. So that's what I'm looking at for now, is just this long-term investment so that I can secure mine and my family's futures. And that's the premise of cryptocurrencies. And as far as I'm concerned, that's what I believe in. That's what I'm all about. So I hope you found that useful. Tune in for the next one, and we'll go over some more, and I'll look at some metrics. We are looking at the economic, social, and environmental aspects of all of these things. So if you're interested in that stuff, great. And I'll see you next time.